Well, the Dow dropped 1,000 points and Japanese stocks have suffered their worst crash since 1987. So what is behind a big sell-off? Well, joining us live is Michael Neuenswander. Michael, thanks so much for joining us. You're a financial planner with Outlook Wealth Advisors. I want to start out first with people are hearing the word today, recession. So what is it and are we headed into one?
So the simple answer is not quite. So officially, a recession is typically defined by two quarters of negative GDP, meaning the U.S. economy is shrinking along with sort of across the board, pullback in economic activity. Okay. Last quarter, so ending, just over a month ago, our GDP was actually still growing at about 2.8% over the last quarter. So we're a long way from a recession at the moment, but at the moment is the key part because we are seeing some indicators things are slowing down, and that's becoming the big worry, particularly when it comes with interest rates and Fed decisions of, is the Fed going to be too slow to cut rates, and do they send us into a recession by having these high interest rates for so long, along with increased unemployment that we're beginning to see some of those things. So we're not in a recession yet, but the worries are beginning to mount.
Okay, so you just mentioned an interest rate cut. Will that help, and what does that mean?
So we were in a period a couple of weeks ago where no matter what the news, the market was going up. So it's everybody's got to remember we were actually at the market high only 12 trading days ago, and now officially we're in a correction. But interest rate cuts are typically help to spur the economy, or in this case, keep the economy from slowing down too much. And so that's sort of what the Fed's job has been doing, is purposely trying to slow the economy to keep inflation in check. And now we're sort of rounding that curve where, higher interest rates are definitely beginning to have more and more of a toll on the economy, certainly on middle class and most of us as consumers. And so the Fed is beginning to feel that pressure, and the market is mounting that pressure with actions like today to force the Fed to maybe say it's time to start cutting interest rates.
During times like this, you hear a lot of people talk about their 401ks. Should people be concerned about that at this point?
So when we look at the investing in the 401k, a couple things to keep in mind. The long term is always your friend, particularly when it comes to retirement, saving for retirement, and planning. So while times like this last week or today in particular may be troubling, the important thing to keep in check is how much risk are you really taking? Like we hear stories like what the market did today, but for some of our clients, I had this conversation this morning. So the market may be behaving one way, but what your portfolio, what your investments are doing are sometimes not quite the same thing. And that's that key word of diversification, meaning all of your money probably should not be 100% in the stock market unless you're a younger, really aggressive investor. As somebody gets closer to retirement, becoming a little closer to needing some of their money, they probably should be dialing that risk back, and in many cases using different types of investments rather than just stocks and bonds to accomplish their financial goals.
Michael, thank you so much for breaking it down for us. We appreciate it because it is a stressful time for people, especially when you see the headlines like we did today, like what is happening. So we appreciate you joining Fox 26 News at 5.
Thank you.